Hello iPix viewers, and a warm welcome to you all. Today we are going to deep dive into a topic that sits at the very heart of our financial lives, a subject that many of us think we understand, but where a small shift in perspective can unlock monumental change. Have you ever looked at your savings account and felt a quiet sense of disappointment? You've been diligent, you've followed the age-old advice, work hard, spend less than you earn, and save the rest. You've dutifully tucked away a portion of every paycheck, watching that balance climb, dollar by dollar. Yet despite all your discipline, the growth feels agonizingly slow. It's like trying to fill a bucket with a slow dripping tap while unseen forces are poking tiny holes in the bottom. You feel like you're doing everything right, but the dream of true financial freedom seems just as distant as it was last year or the year before. You're not just saving money, you're saving for a future, for security, for freedom, but is your current strategy truly getting you there? Now what if I told you that the very foundation of this traditional wisdom, the save, save, save mantra, is flawed in today's economic landscape? What if I told you that by fundamentally shifting my approach and stopping traditional saving as my primary strategy, I was able to triple my net worth? It sounds unbelievable, doesn't it? It might even sound irresponsible or like some get-rich-quick fantasy. I assure you it's neither. This isn't about reckless gambling or chasing speculative fads. This is about understanding how money truly works in the 21st century. So, buckle up, because this isn't just a story, it's a strategy. It's a roadmap that redefines your relationship with money, transforming you from a passive saver into an active wealth builder. We are going to dismantle the myths that hold so many people back and replace them with actionable, modern principles for financial growth. We'll explore how to make your money work for you 24/7 through the power of investing, creating new income streams, and harnessing the incredible force of compounding. This is about turning your financial journey from a slow crawl into a powerful, deliberate stride towards your goals. Forget everything you thought you knew about saving. The real journey to wealth begins now. Most of us are taught to save diligently, but here's the catch: saving alone isn't enough. In fact, with inflation and stagnant interest rates, your hard-earned money might be losing value over time. The game changer? Shifting focus from saving to investing and earning. In 2025, financial experts emphasize that building wealth isn't just about cutting expenses, it's about making your money work for you. Hello iPix viewers, and welcome. Today we're going to deep dive into a topic that's crucial for everyone's future: building real, sustainable wealth. Many of us were taught to save our money diligently, putting it away in a bank account, thinking it's the safest path. But what if I told you that in today's economy, just saving your money is one of the surest ways to lose it? It sounds counterintuitive, but it's a reality we all need to face. I learned this the hard way, and it completely changed my approach to finances. I went from being a disciplined saver to a strategic wealth builder. Here's how I did it, and how you can too, backed by the latest trends and timeless principles. The old advice to simply save is no longer enough. Let's talk about the trap of traditional savings. When your money sits in a standard savings account, it's fighting a losing battle against a silent financial enemy: inflation. Inflation is the rate at which the general level of prices for goods and services is rising, and subsequently, purchasing power is falling. If your savings account earns you 1% interest, but inflation is at 3%, you're effectively losing 2% of your money's value every single year. Your hard-earned cash is shrinking, not growing. This is the quiet crisis that keeps millions from achieving financial freedom. They're doing everything they were told was right, yet they're falling behind. But there is a turning point. The moment you realize that your money needs to work for you, not just sit there. This is the fundamental shift from a saver's mindset to an investor's mindset. Instead of just preserving your capital, you start deploying it. You put your money into assets that have the potential to grow faster than inflation, generating returns that build on themselves over time. This is where true wealth creation begins. It's not about gambling or taking wild risks. It's about making informed, strategic decisions to put your money to work in the global economy. So, what are the key strategies for 2025? It all starts with diversification. Don't put all your eggs in one basket. Diversifying into a mix of stocks, real estate, and alternative investments can yield significantly higher returns than any traditional savings account. Stocks, or equities, represent ownership in a company, allowing you to share in its profits and growth. Real estate, whether it's a rental property or a real estate investment trust, provides tangible assets and potential rental income. And alternative investments, like digital assets or private equity, can offer unique growth opportunities, though often with higher risk. The key is to create a balanced portfolio that aligns with your personal risk tolerance and financial goals. Beyond just appreciation, the goal is to create multiple income streams. This is how you truly make money work for you. Building passive or semi-passive income through things like stock dividends, royalties from creative work, or automated online businesses allows money to flow in even while you sleep. Dividends are payments companies make to their shareholders. Royalties are payments for the use of your intellectual property. An online business could be anything from selling digital products to affiliate marketing. Each stream is like a small river flowing into the larger lake of your net worth, creating a powerful and resilient financial foundation. In today's world, we have powerful tools to help us. Utilizing AI-driven investment platforms and robo-advisors can optimize portfolio management and help reduce certain risks. These platforms use algorithms to build and manage a diversified portfolio for you, automatically rebalancing it to stay on track with your goals. They can analyze vast amounts of market data in seconds, a task impossible for a human. However, it's crucial to remember that these are tools, not magic wands. You are still the CEO of your finances. Use AI to inform your decisions, but never abdicate your responsibility to understand where your money is going. This brings us to the most powerful force in finance: compound growth. Albert Einstein supposedly called it the eighth wonder of the world. It's the process where your investment returns start generating their own returns. Imagine you invest $1,000 and earn a 10% return, giving you $1,100. The next year you earn 10%, not on your original $1,000, but on the new total of $1,100. This snowball effect is small at first, but over decades, it can turn modest investments into substantial wealth. The key is to start early and be consistent, and that requires the right mindset. Wealth building is a marathon, not a sprint. It demands patience, discipline, and a growth mindset. The belief that you can learn and improve. You will see market downturns. You will question your decisions. But those who succeed are the ones who stay the course, continue to learn, and consistently invest, regardless of the market's mood. It's about time in the market, not timing the market. Compound interest is often called the eighth wonder of the world. By reinvesting earnings, your wealth grows exponentially over time. Success isn't just about numbers, it's about mindset. Adopting a growth-oriented mindset opens doors to opportunities and innovation. Feeling empowered to take control of your financial future is a fantastic first step, but turning that motivation into momentum requires a clear, practical plan. So, where do you actually begin? Let's break down the journey into manageable steps, creating a roadmap that anyone can follow. This isn't about complex theories, it's about actionable strategies to get you started on the right foot. First, and most importantly, define your why. What are your financial goals? Are you investing for retirement in 30 years, a down payment on a house in 5, or perhaps to fund your child's education? Your goals determine your timeline, your risk tolerance, and the type of investment strategy you'll build. Write them down. Make them specific, measurable, and tangible. This why will be your anchor, keeping you focused during market fluctuations and motivating you to stay consistent. Before you invest a single dollar, you must build your financial foundation, an emergency fund. This is non-negotiable. An emergency fund is 3 to 6 months worth of essential living expenses, kept in a high-yield savings account where it's safe and easily accessible. This fund is your safety net. It ensures that an unexpected car repair or medical bill doesn't force you to sell your investments at the worst possible time. It's the bedrock upon which your entire investment house is built. With your safety net in place, it's time to open the door to the market. This means setting up a brokerage account. Don't be intimidated by the term. It's simply a specialized account designed to hold investments like stocks and funds. Today, opening an account with a reputable online brokerage is incredibly straightforward. You can often do it from your phone in just a few minutes. Look for platforms with low fees, a wide range of investment options, and good educational resources to support your journey. Now, how do you start investing? You don't need a large lump sum. The key is to begin with manageable amounts and embrace a powerful strategy called dollar cost averaging, or DCA. This simply means investing a fixed amount of money at regular intervals, say $50 or $100 every month, regardless of what the market is doing. When prices are high, your fixed amount buys fewer shares. When prices are low, it buys more. Over time, this approach smooths out your average cost and reduces the risk of investing a large sum at a market peak. It's about consistency, not timing the market. Finally, remember that this is a journey, not a one-time event. As you learn and your portfolio grows, you'll need to periodically rebalance it to ensure it stays aligned with your goals, and never hesitate to seek knowledge. Stay informed by reading financial news, and if you feel you need personalized guidance, consider consulting with a qualified financial advisor. They can help you tailor a strategy specifically for your unique situation. Remember, the goal is progress, not perfection. The best time to start was yesterday. The next best time is right now. Remember, the journey to wealth isn't about how much you save. It's about how wisely you invest and grow. Stop saving, start investing, and watch your net worth soar. Like this video, hit the like button, subscribe for more insights, and share your thoughts in the comments below. Let's grow together.